Introduction. In this article, we explore business lines of credit, their benefits, and the factors to consider when selecting a lender. We'll discuss terms and conditions and how to effectively manage and repay these flexible financing solutions. What is a business line of credit? A business line of credit is a flexible financing solution that allows businesses to borrow up to a predetermined limit and repay funds as needed. Unlike traditional term loans, you only pay interest on the amount you use, making it ideal for managing cash flow fluctuations and unexpected expenses. Benefits of business lines of credit: flexibility and accessibility, access to capital when needed, draw funds as required without reapplying revolving credit. The credit line replenishes as you make repayments, flexible repayment terms, options that adapt to your business's financial situation, quick application process. Many lenders offer same-day or 24-hour funding, financial advantages, improved cash flow management, bridge gaps in cash flow and handle seasonal fluctuations, lower costs. Only pay interest on funds actually used, building business credit, establish and improve your business credit profile, no collateral requirements. For many unsecured options, top business line of credit providers. Bluevine. Key features: credit lines from $10,000 to $250,000, interest rates starting at 8%, flexible repayment terms, 6 to 24 months, minimum monthly revenue requirement, $10,000, personal FICO score requirement, 625 plus, benefits, fast approval and same-day funding, no hidden fees, competitive interest rates, helps build business credit. American Express business line of credit. Key features: fast online application process, credit limits up to $250,000, interest rates from 8% and up, funding available within 24 hours, benefits: predictable costs, no prepayment penalties, no origination fees, no annual fee for the first year, transparent fee structure. Truest small business line of credit. Key features: credit lines from $5,000 to $500,000, competitive interest rates, revolving credit structure. Benefits: flexible repayment terms, immediate access to working capital, no prepayment penalties, excellent for managing seasonal cash flow fluctuations. Fund box small business line of credit. Key features: easy online application, quick approvals with funding in as little as 1 business day, no collateral required. Benefits: manage cash flow gaps, no debt obligations or interest charges when not in use, no prepayment penalties, no fees for late payments. On deck business line of credit. Key features: competitive interest rates, transparent terms, no collateral required. Benefits: improved cash flow management, increased flexibility, streamlined application process, alternative data sources for evaluation beyond traditional credit reports. Headway capital. Key features: flexible funding amounts, simple online application process, revolving capital structure. Benefits: customizable withdrawal options, ongoing availability of funds, flexible repayment schedules, effective cash flow management solution. Lendio. Key features: marketplace connecting businesses with multiple lenders, fast access to funds, simple application process. Benefits: access to numerous financing options through single application, personalized matching with suitable lenders, streamlined comparison process, comparing business lines of credit. Bank/lender credit line range, structure, interest rates, funding speed. Wells Fargo, $5,000 to $500,000, revolving 7.5% plus as early as 24 hours. Lending Club, $5,000 to $250,000, revolving 7.8% plus as early as 24 hours. Funding Circle, $5,000 to $250,000, revolving 7.8% plus as early as 24 hours. Bluevine, $10,000 to $250,000, revolving 8% plus, same day possible. American Express, up to $250,000, revolving 8% plus as early as 24 hours. How business lines of credit work: application, submit required business documentation and financial information, approval. Lender evaluates your application and determines terms. Access, once approved, draw funds as needed up to your credit limit. Repayment, make regular payments on the amount borrowed plus interest. Renewal, as you repay, your available credit replenishes. Eligibility requirements: common requirements across most lenders include minimum time in business, typically 6 to 12 months, minimum annual revenue, often $10,000 to $100,000, minimum credit score, usually 600 plus, Good standing with Secretary of State/business registration authorities, no active bankruptcies or major tax liens. Selecting the right business line of credit. Factors to consider: credit limit needs. Determine how much funding your business requires. Interest rates and fees. Compare total costs across lenders. Repayment terms. Choose options that match your cash flow patterns. Funding speed. Consider how quickly you need access to capital. Eligibility requirements. Ensure you meet the lender's criteria. Types of business lines of credit. 1. Secured business lines of credit requires collateral, equipment, inventory. Real estate generally offers lower interest rates, higher credit limits available, better terms for businesses with limited credit history. 2. Unsecured business lines of credit, no collateral required, typically higher interest rates, often faster application and approval process, usually requires stronger credit profile. Alternative financing options: invoice financing, leverage unpaid invoices to access capital, improve cash flow without taking on traditional debt, often features lower interest rates than conventional lines of credit. Equipment financing, specifically designed for purchasing business equipment. Equipment serves as collateral. Fixed interest rates and predictable payment schedule. SBA loans, government-backed loans with favorable terms, lower interest rates, and longer repayment periods, more stringent application requirements, excellent for established businesses with strong credit. Managing your business line of credit. Best practices: use for short-term needs rather than long-term investments. Monitor your credit utilization ratio. Make timely payments to build business credit. Regularly review terms and shop for better rates. Maintain accurate cash flow projections to optimize usage. Common uses: managing seasonal cash flow fluctuations, covering unexpected expenses or emergency repairs, purchasing inventory at volume discounts, bridging gaps in accounts receivable, supporting short-term growth opportunities, funding marketing campaigns or business expansion. Conclusion: a business line of credit offers the flexibility and financial support needed to navigate the challenges of business ownership. By understanding the options available and choosing the right lender for your specific needs, you can leverage this powerful financial tool to manage cash flow and fuel business growth effectively. When evaluating potential lenders, consider factors such as interest rates, repayment terms, application requirements, and funding speed. Whether you choose an established bank like Truist or Wells Fargo, or an alternative lender like Bluevine or Fundbox, the key is finding a financing solution that aligns with your business objectives and financial situation.